What's happening, guys? A little guest today on Sunday Scan. My wife went for a walk and he decided that he did not want to continue to sleep. So until she gets back, we're going to have this extra guest for the short while. First and foremost, Traders for a Cause. I did a quick little video earlier this week. I want to make sure that you guys saw that. That is 100% free. It's the 17th and the 18th of October. We are supporting Breast Cancer Research Foundation, and it is going to be one of the best events that we've ever done. Typically, we do it in Vegas. Typically, it's $750 to $1,000 plus a plane ticket plus hotel room. So everybody that typically goes, you're saving a couple grand. So hopefully that can go right into the causes that we are donating if you guys pick up at least one thing from the event. So thank you guys for signing up. Thank you guys for your interest. So far, we've got quite a bit of signups. I do think we're going to have way more than the COVID event where we had over 10,000 registrations. And I think that's just between now and that last event. I feel like the number of traders that have been in the market has pretty much quadrupled. So, we'll see what happens with that. Looking left, I wanted to talk about looking left. I've got the Always Look Left shirt, and me and Josh went back and forth as to whether or not it should point this way or that way. Right now, it's pointing to my right arm, but for you guys, I believe that it's pointing the right way to the left. So, feel free to comment which way you think it should go. It's been a disagreement between me and Josh for quite some time, so we'll see who ends up being right in the end. This is a simple but yet effective, something that you really need to consider, something that you really need to go over in your trading. And looking at those charts, looking at the front side versus the back side of the moves. You see me go over it every single Sunday. I go over it every single day in the room. And I've been doing the chat room for over, almost 12 years now, over 11 years. And I've received the most feedback, the most positive feedback over the last 6 months by just adjusting and putting those levels in the room, those key areas to watch, the failed follow through momentum, the front side, back side, the key levels that need to crack, that need to exhaust out. And all of that is done by looking left, both to get on the short side, both to potentially buy on the long side, but also thinking about how high stocks can go. So if you are a short seller, how high they could go before you start getting in there, getting on the wrong side of the trade too early. Giving yourself that, this could actually go here. So I'm going to not get bent. I'm not going to start too soon, and I'm going to let it test those prior levels. So other than that, I feel like I'm not calling for another Kodak moment. If you guys remember, I did the Sunday Scan the week before Kodak squeezed. I said I feel like something's coming. And it just felt like everybody was firing, everybody was using size, everybody was going nuts. And it feels like that again. Last week, you could literally trade any size you wanted. The volume was huge, 100, 200 million shares on every single trade that we took. And you could trade, whatever you're comfortable with, but 20, 30, 50, 100, 200,000 shares or more, and literally not move the price of the stock, more than a few cents. So that was something that was very interesting and something that you need to kind of take note on. The other thing to think about is focusing on less. Normally I try to trade a bunch of different names and then scale into the ones that are working. But for me this week, it was Baby Mama is back. Thank you. All right, take two. Focusing less is more. I always talk about that. But I think it was very important this week because, we all want to trade a bunch of different things. And we all want to be, on the hot stocks. We all want to be on whatever's moving. But the reality is if you zone into one or two names, you're going to make a whole lot more. So I like to be involved in a bunch of different names, but I made it a point this week to pick two and scale into those trades. And, SLDB was a great example. I might have traded 10 or 12 names, maybe a little bit more that day, but I had a lot of stocks that I started into. I never scaled, and I just kind of, took them off. because there's no reason to stay wrong on trades right now. There's no reason to scale into trades if you're not right. But if you are right, scale, 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 and let that trade do the work. So that was my goal this week, to really let the trades do the work. And as you saw with SLDB, LONE, as well as WWR, for those of you guys that pay attention on Twitter, WWR, it's not always shorts with me. I'm also looking for long opportunities, but WWR, I posted under 3 that it reminded me of WTRC, and I felt like it was going to be going to 4 to 5 in the short term. I actually said within maybe like 15 to 30 days, but it ended up being the next day. So you can kind of get that feel. It's rare that you get a solid read on some of these names, but my goal is to always take advantage of those market inefficiencies. And that was a market inefficiency that I felt was, there, coming, near term. Felt like there was too much supply, not from a paper sense, but more so from a shorter sense, right? So if there's too much supply too low and the demand keeps up, what do you think is going to happen? It's just a game of numbers, supply and demand. If demand's too hard, supply is not enough, it's going to go up. And then if you've got the short stuck, you get a nice little breakout like the 4 to 5 move on WWR. So that's exactly what happened with that. The biggest thing, I think, or at least the big key takeaway from this week, I put out a couple tweets this weekend, and it was about Joe Kahn and the Short Bear, two friends that I've met. Joe I've known for, I don't know, probably 8 years or so. He's from around where I live. We've hung out plenty of times. Really great guy. And then Short Bear, who's somebody that I had met just this past year. He's only 20 years old, but they both posted big P&Ls. And usually I say, whatever, like, people posting P&Ls and things like that. Usually it's subscription-based services that are, hanging that low-hanging fruit, trying to get you or attract you to their service. And that's kind of where I feel like it's not a good thing to do, because you attract the wrong people. You attract the people that are just looking to make profits. They don't really care about the process or anything like that. But these two have a way of posting it, but also kind of devaluing that P&L and putting the value on the process, putting the value on data, putting the value on doing the same thing over and over, and showing you what pushing the envelope could result in, right? And for me, I've been trading, I think, 17 years now or so, but it's always good for me to see that kind of stuff, not to be influenced and go, crazy the next day and then blow up my account, but more so to say, you know what? There is more room. I can push the envelope when the risk is lined up with the reward, when it's a proper risk, an A+ setup, and there is the ability to do a little bit more. So if you can always get 1% better every single day and be a better you than the day before, look, you shouldn't be trying to go and make 100 or a million in some cases, like some of these guys in a day. If you do that, you're going to go the wrong way. But if you focus on getting a little bit better, finding out what that setup, how that setup could have been just a tad bit better for you, how you could have scaled in, how you could have been a little bit more patient, and kind of review that data, that process, and stick to that one theme over and over and over again, you're going to see some major results. And like I was talking about with my goal this week was just sizing into 1 or 2, right? A lot of these guys that trade really, really well, you'll see they're only trading 1 or 2 names, right? So for me, I like to be, in the pulse of the market, getting a feel for things, and I'm very good at timing the market, timing when things might pull back, or whatever the case may be. But with that said, I miss out some of these A+ opportunities where I can push the envelope without that added risk, right? You should be able to push, or you should push that envelope as far as you can go, as long as the risk isn't greater and greater and greater. And there are those opportunities. And these recent tweets and my point this weekend was open your eyes to those opportunities. And you might not have known that was possible if some of these guys didn't post certain things. Sure, we all know it could happen, and maybe you get lucky one day, but consistently coming to the market and doing it. What could you do that's going to make you better? What could you do that's going to make you focus on the next one? And really what it comes down to is fine-tuning that list to one or two names. Typically in the morning, 8:50 a.m., I do my pre-market broadcast with the microphone and go over everything that I'm looking for during the day. Normally, I bring it down to 2 to 3, a max of 4 names that I am focused on. One or two of those is going to get my size and my focus. The rest of them are just, I'm going to be kind of probably trading throughout the day while I let the other ones work. And then, look for the next other stocks that I could potentially join and things like that. But my focus is always on one or two, max 3 or 4 off the open. And I'm never going to trade size on more than 1 or 2 at once. And my goal last week and my goal this week is to size into the ones that have that opportunity, more so than just, I know this is going to work, I'll just take the trade because, it's got a high probability of working. Well, if it has such a high probability of working, why not push the envelope within means to continue to, really stretch, your process and really get some results that, you might not have otherwise known were possible if somebody didn't push you in that direction. So once again, I'm not saying, go reckless and start trading bigger and all that kind of stuff. But once you have a proper process, once you know what you're good at, once you know what 80, 90, 95% of the time is a yes, then that's where you want to focus. That's where you want to risk. And that's where you want to, really put most of your attention and excel as a trader. So I think that's it for what I had prepared remarks. Obviously this week is going to be a little wild with Trump. We got a little taste of that on Friday. I actually was pretty impressed with the amount that it rebounded. Maybe he's fine. Maybe he will be fine. But the fact that, he's 70 and there's just the statistics and all that kind of stuff, there's such risk. And I was very, very surprised that the market barely budged really after pre-market. Pre-market obviously was the lowest, then it rallied back huge, but it just goes to show you that nothing is obvious in this market, and all that matters right now is trend, joining it, and not fighting it. Because if you fight stuff, you're going to be on the wrong side. So let's get into what the game plan is for this week, and hopefully we have another nice week like last week. It was a great way to end August, and it was a great way to start September. September 1st was a big one. I think that was SLDB day. But great opportunities, great preparation, and really that's what it comes down to. All right, guys, had to readjust a little bit. The light was making it way too dark. So first and foremost, JKS. JKS is going to be a main watch. This is all about looking left. This is all about key levels. This is all about VWAP. This is all about not pre-exhausting on the front side of the move. It's been straight up for about 3 weeks now. If you look at the daily, it's been a huge, huge move. That does not mean that it has to come down. That's the biggest kind of takeaway over the last couple of weeks. And, I always remind people of that. And I always, I start to see people, trying to short and then add and then add and add. And I just continually remind you not to pre-exhaust on the front side of the move. This is a great example. BBBY is a great example. FSL, or not FSLR, but Run and VSLR, among many others. If you guys remember going back INO and all those other stocks that were just going straight up, they can keep on going longer than you think. So don't step in front of it. Pay attention to key levels. 4350s is obviously the key level here. Just draw a line under all the prior supports. Looking left, draw that line. That's your key level. As I say in the room every single day, if you're new, pay attention to those levels. There's no reason for you to be trying to trade anything, even that I'm trading, above those levels. I write those levels on purpose because I know if you don't know what you're doing, you're going to get ran over. So for me, 4350s is going to be the key level. Higher the better, but I'm looking for that potential unwind. And if and when this does pull back, we are going to get that big $3, $4, $5 pullback, and that's what I'm going for. I am going to try it every single day with small shares until that day comes, but that's me. And I'm not fighting it with size. I will be there size the day that it pulls back. And that's the difference between getting exhausted on the front side and waiting for it. So I would suggest most of you wait for that trade. WWR, beautiful, nice idea from under threes for thinking that it was going to go $4 to $5 per share. It did exactly that. Great opportunity. Hopefully you guys were able to take advantage of it. Really nice alert in the room. But for me, at this point, I feel like it's probably going to need to consolidate. So I think there's going to be one trade-off open tomorrow. It's either going to be a 420, 450 push, and then it starts to pull back, or it's going to be maybe a 4 or 380 open, flushes out, and then rallies back towards, you know, the 420, 450 mark. So I think that there's going to be that opportunity, and then leave it alone, let it consolidate, let it do its thing. I think a lot of people were on the wrong side of the trade, and I think that it needs to kind of reconsolidate for a little bit before it kind of makes its next move. Microsoft was a nice opportunity for me. It added up way more than I thought. Loan was the top trade for me on Friday, but this particular trade on Microsoft ended up being a monster, and it wasn't, you know, that I even was super aggressive. I mean, you can trade size on it, and I did, but just by nailing that move, which basically, I mean, it was 210 to basically 205, 206s, but it allowed you to kind of scale into that trade, and when that market came in, I mean, it was a fantastic trade. And the thing that I look for is stocks that have relative weakness to the peers, right? So in this case, Microsoft, AMD were a little bit weaker than, you know, the market overall. So when and if the market starts to pull back, these likely are going to pull back even faster, and that's exactly what happened. So I'll be watching MSFT, AMD as kind of the kind of trades that I like to trade with the market. Under the next section, so as you guys know, if you go to the description and click the link to go through to the scan, you will see a link that you know, it has all the information that I'm talking about right now. It's got the charts, it's got some of the feedback. So make sure you guys click through and check that out. But under the failed follow through momentum section, I have run, PACD, and basically run is very similar. It's just like JKS. It's another solar. Nice trade. You can see that the VWAP seller had kind of come into the tape on Friday. So for me, I like to see that. I liked how it came in here, stayed heavy, retested. It failed to even reclaim that VWAP test. So that was one thing that you know, brings my attention to it. So on a trade like this, basically I look, where did it have the most support? 77. So ideally it ramps up 77, maybe up to 77.50s, and then I'd be looking for a fade. I think that it will have some resistance at that VWAP level, which is this yellow line that you can see. Other than that, PACD was a nice ripper after hours. It reminds me a lot of LONE. So hopefully this thing's 40, 45, 50 or something like that, and we can kind of mimic the same loan trade that we had, which, you know, I shorted 72, 73, 70, 68, 66, 65, and covered, you know, into the low 40s and the mid 30s. So higher the better, and I'll be watching that one. Under the next section, it's called continuation. Typically I look for, you know, stocks that I think will continue to trend potentially. ENLV, one of the things that I said to start this was I feel like there's a lot of shorts that are slugging some serious size right now. And, you know, my antenna's up because, you know, when we do have that 100, 200 million share low float stock that everybody is short, you know, 100, 200, 500,000 shares, at some point it's going to catch up and it's going to produce a monster squeeze. So I want to have my antenna up, like I said, just being aware of that this week, because we are close to another, you know, potential trade where people get a little complacent on risk and, you know, things don't work out for them. ENLV was another one where, you know, it pretty much gapped up, had huge volume, and then it just unwound. And then it actually came back on Friday pretty nicely. So I was buying dips, had a little push after hours, but then that was about it. So I'd be looking for kind of 10.50 to start the base and potential 11, 12 type of breakout. PRPH, nice one. This was a scan hit on Friday. It's been on the scanner pretty much every single day since this big volume day. It had about 12 million shares or so. But as you guys know, I talk about that big volume day and then how it acts after that, right? The dip's getting soaked, and it continues to make new highs. So we obviously had an outlier breakout on Friday. So let's see how it pulls back. If it starts to consolidate, I'd be looking for dips versus 450s. So 470, 480s. If it starts to consolidate, slow down, then I'd be interested. NXTC, I've got a position there. This chart is starting to turn. If you guys remember, this was the one that started a lot of the craziness. It went all the way up to $100 that day. I'm not saying that it's going to do that again, but many of you will remember that trade because of that move. But you can see that there's obviously a buyer on the tape right now. There's been a little bit of consolidation, but the biggest level for me is that 10 level. The 10 level is going to be of interest. Watch for the volume. Watch to see if it retakes. See if there's any PRs, anything like that. If we get some updates or some PR or anything, I think that there's a good chance that we could get a 20, 30, 40% mover on this thing. But I have to do a little bit of work on this one and EOLS. I think EOLS has something coming up as well. It's all about catalysts with these things. So I have to brush up on that stuff Monday morning, which is typically, my scans right now are mostly technical, and then I kind of dig into the fundamental and kind of find a little bit more edge and or catalyst in the mornings. So again, you can see buyer. All higher lows, higher lows, higher lows in the tape, and we're up against this 420, 450 mark, which has been kind of the top. And there's a good chance that we could get into this gap, fill towards the 550, something like that. Beam, I like this daily chart. I'm currently, I put on a little bit, but I'm thinking that we could potentially have a nice little breakout on this if the dips hold. I'd be looking for a pullback under 14s position and potential breakout towards 16, 18, 20, 22, something like that. PFMT, I actually had a position on this and I sold it, but I'm looking to kind of reposition just because it's held super well. It's held better than I thought. It had that huge pretty much breakout day, and then it flushed out, retested that daily VWAP, and then it consolidated and broke out. VVPR is the other one. I wrote my thoughts. Obviously, I don't really want this to be a crowded trade. I have a position in it. Lower the better. But I wrote my thoughts out in the room, so you guys can feel free to check out the chat logs on that one as far as what I think is possible on this thing and what I'm kind of looking for. But it's one of those situations where it's more about the risk to me rather than I want to know what I could risk for the potential of the move that I'm expecting. So it's done way more than I probably expected, and probably many shorts expected. So it's one of those that could turn into a pretty monster mover. And last but not least is IDT. IDT ideally consolidates, starts to hold trend, and continues to break out throughout the next couple days. The situation like this, you guys remember CRDF. This is kind of what I'm thinking could be the potential on IDT if we have consolidation over the next couple of days. So you've got that first big move day where all the volume comes in, somebody positions, somebody takes a good chunk, and then they just let it kind of consolidate, and as you can see, the demand stuck. And same thing IDT. You've got that volume. Same thing actually on PFMT, where you've got that huge volume day. Somebody comes in, takes a position, and then all of a sudden the dips are starting to get soaked. So that's what I look for when I'm looking to, at least get long on particular names. So other than that, like I said, click through, go to the description, click through to the website. You'll see Staying Familiar. I have NNOX, CTIC, SLDB. I set price alerts on all these things. You got a couple airlines. PACB, Piton, BBBY. I like to look left and look at prior resistance and prior support levels, put those into my IU database so it will alert me. Price alerts will alert me when I want to know, when it's time to know, and then I can go ahead and execute the trade without having to watch each and every single tick on these names. So that's about it for what I'm prepared for. Again, zone in, focus. If you go back to the beginning of this scan, it was all about really zoning in and, kind of understanding your potential. What is your true potential? And how far can you go within the proper risk parameters without, getting reckless. I don't want anybody to get reckless, but you can always do better. And I think that's one of the most important pieces of trading. So let me go ahead and pick a winner because as usual, I forgot to get prepared. So I probably shouldn't have showed up yet, but let me pick a winner for the t-shirts. Let's see here. As you guys know, all you have to do, leave your key takeaway on the comment section, and you are going to be, at some point, probably a winner of a shirt, or IU, or Momo Trader's book. Will Peters 17. So if you email me, webmaster@investorsunderground.com, we'll get a shirt sent out to you. And that's about it, guys. So I hope you guys have a great rest of the weekend, and we'll catch you in the room tomorrow.